In this chapter, you will learn about the different account types available to you in Sage 50. The different types of accounts that will be discussed in this chapter are asset accounts, liability accounts, and equity accounts. Asset accounts are used to track both current assets, which are assets that you're likely to convert into cash or use up within 1 year, as well as fixed assets, which are long-lived assets, including loans that you make to others, equipment, and buildings, for example. Liability accounts are used to track both current liabilities, which are scheduled to be paid within the year, as well as long-term liabilities, which are loans that you have to pay back in a period greater than a year. We'll also discuss equity accounts. These are used to track owner's equity, including capital investment, draws, and retained earnings. Sage 50 has two account types for measuring the value of your short-term and long-term assets. The other current assets account type tracks assets that are likely to be converted into cash or used up within 1 year. Examples of other current assets might include amounts for treasury bills, certificates of deposit, prepaid expenses such as amounts already paid for services your business has yet to receive, prepaid deposits which will be returned to you at a later date, reimbursable expenses, and notes receivable if they are due within 1 year. Other examples of current assets are also your accounts receivable, bank accounts, and cash. Sage 50 provides three types of current asset accounts for you to use as you create the asset accounts for your company. First, there's cash, which tracks each cash-based bank account as well as petty cash. You also have accounts receivable, which tracks money owed to your business. You also have the general other current assets account to track current assets that are going to be converted into cash or used up within a year, but which are neither accounts receivable nor cash. A fixed assets account tracks assets your business owns that are not likely to be converted into cash within a year. A fixed asset is usually something necessary for the operation of your business, like vehicles, computers, and office equipment. These will also tend to be assets that have a considerable value, which you use up or expense over a period of several years through a process known as depreciation.